How's it going, fellow traders? It's Magic Trader here, and this is the CFTC report for December 26, 2017. Here is a snapshot of the data of the positions that the hedge funds, the banks, and the institutions were holding as of December 26, 2017. So let's start with gold. Let's take a look at what the institutions are doing with gold, okay? So, what do we see here? So, December 26, we see that long positions are 202,000. All right. Back in November 28, we had 287,000, and basically over the last 1, 2, 3, 4 weeks, it has been declining. So, what do we see here, right? We were at 79% exposed to the long side up here. And what did we say? When institutions are usually up at those 79, 80 marks, you see profit taking on long positions, right? And that's exactly what happened here. So 79, they took profits, so we saw a decline in price. A move upwards, then we saw a long exposure of 82. What did we see? Profit taking for a move downwards. So move downwards, and then long exposure became 68%, so massive profits being taken on long positions there. I dropped to 68%, and now what do we see? We see a push upwards. So we've been expecting this move for quite some time now, right? Because we've determined that there is a monthly area here that was capable of penetrating through a trend line that existed on a 3-month chart. So that area penetrated through that trend line only for one reason, because there was enough demand from the institutions to cause a break through that trend line. So that's obviously an area that we want to pay particular attention to, because when the institutions come in and they see a trend line, and specifically if that trend line is on a higher time frame, and they see that trend line, they know that there's going to be a lot of retail traders who are going to be selling when price hits that descending trend line. So they need to come in and fill the market with enough demand to force price through all that supply that's coming into the market and beyond. And so that's what I believe happened here. On the monthly chart, you see price broke through. We had one candle of consolidation, and then price dipped back inside. So I've been waiting for that demand to come back into the market here for a push higher, and I believe we are starting to see the beginning signs of that, because over the last 2 weeks now we see a really strong push up. Okay, this data pertains to excuse me, this candle right here, this tall green candle right here. So what do we see? One second. So we see that longs were added from 197 to 202, but the bigger move was closing shorts from 83,000 to 66,000. This is a good sign, right? Because when price was up here, we had shorts at 62,000. When price was up here, we had shorts at 90,000. So what they've been doing since price was up here is reducing shorts from 90,000 down to 60. Then they added some more for the move downwards while we got that move downwards, and now they're closing off their shorts, reducing shorts again from 94 to 66. So now we're at 75% long exposure. So you can obviously see it's not as aggressive as the 82 that was here, so that leaves room to be added to. But I think this move to the upside is going to be short-lived, because they have supply sitting right here on the weekly chart. All right, so what I believe is setting up right now is a potential move right up here to this weekly area of supply. I'd like to see a move downwards here into this area of weekly demand, and then I'll take positions, long positions, and targeting here the weekly supply. Why? Because I don't want to hold longer term than that, because I want this weekly supply zone to be taken out afterwards. All right, so I want to take full profits on here because I expect a move to the downside once we get there. So once we get that move to the downside, I'll look for new areas of demand to be formed by the institutions. I want to see proof that they're ready to take price past these highs. And then when I see that, I'll get back into the market and I'll ride this one up, because I believe that we have a bigger move to the upside in the workings right now. Okay, so that's what I've got my eyes on. So all the data makes sense to the idea of this pulling back to this demand and moving up to this weekly supply. All the data that I'm seeing here, it correlates with what this idea, this trade idea is. Okay, so let's go on to oil. What do we see with oil? We see that they increased longs from 749,000 to 772,000. Shorts were decreased from 148,000 to 140,000. So that only bumps up long exposure 1 point. So again, we're very overexposed here on longs. So I am expecting a move back downwards. Okay, I'm expecting the institutions to take some profits here, because you know they can continue adding long and bring exposure into the 90s, but based on previous trading, we've seen that when they get into the 80s, there's typically some profit taking. All right, and here's the thing too, when you look at the weekly chart is kind of overextended, right? So I was looking to take trades on this latest weekly area of demand, but I'm going to be holding off on that right now. What I'd like to see happen is I'd like to see price push up into this area here, some profit taking to occur, and then I'm going to wait for new long setups to form. Okay, I'm going to wait for momentum to shift from dropping price to price dropping to price sitting sideways, longs being accumulated again, and right when price is just about to take off to the upside, that's when I'm going to be looking to get in. But I don't want to get in when long exposure is 85% and we're at these highs. Okay, that's just craziness. So I'm going to wait for a pullback. I'd like to see price shift momentum, and then I'll get into the long side. US dollar, we see price dropping right into this weekly area of demand that we have determined is a very poorly formed area of demand. So we should expect this to eventually break. And what do we see with their positions? They're adding longs. Okay, and this comes with this candle right here. As price was dropping, they were adding longs, but they were also adding a lot to their shorts, from 22,000 to 26,000. The net effect being short exposure rallies up 2 points from 46% to 48%. So net positions are in the positive, but I don't really worry about that too much. What I see on the monthly chart is a move downwards to at least here. And I believe there's a high probability chance we see a reversal from this area here. Okay, so these numbers are great, right? We've had a bearish bias for quite some time now, and it's not overexposed to the short side. So these numbers are great. The only thing is there's going to be a lot of hurdles to jump through for price to get from where it's at to down here. And I don't want to be riding such a volatile market up and down until we get to here, because a lot of stops can be triggered and it's not a high probability setup. But I do believe, I do expect over the longer term for price to get down here. All right, so I think things are looking good for that move to happen. Again, we're hitting weekly area demand, so a little bit of upside is expected, or we could just break right through this and continue to drop. Eventually this is going to be taken out because it is poorly formed and the odds are against it holding. Aussie US dollar, what do we see? So a couple weeks ago we saw a massive drop in longs, and I wasn't too sure if that was because of options expiries or what. But what we can see here is that their long exposure has been dropped quite significantly from 93,000 to 38,000. So it's kind of strange because that happens as price dropped. Okay, so price drops, right? Because this candle here is this data right here, 38, and then this previous 38 is this candle here, and then 93 is this drop here. So somewhere between that drop and the rally, we got a massive amount of longs being closed out. And if you look at shorts, shorts were added to, right? From 43 to 50, shorts were added. So right now, short exposure is 58%. Net positions is a negative 13,000. So what does that mean for the Aussie? I mean, if you look at the technicals, it looks prime for a move up here, right? With the US dollar expected to drop, that is ideal for this move to the upside. So I was definitely thinking about this and trying to figure out what is going on here. And so let's take a look at what I wrote. Price continues to rally hard from the monthly demand imbalance. The weekly supply has been removed, leaving no other weekly supply up on the charts. The coast is clear for a move up into the 80s. It's confusing to see the big drop in long positions as this is happening on the charts. Only thing as this is happening on the charts. Only thing I can think here is there is definitely a force buying up the Aussie that is not represented in these figures. The charts don't lie, though, and we can clearly see demand coming into this one, waiting for pullback, then getting in long. So yeah, I am looking to get in long down here. Okay, because again, the charts don't lie. The charts show supply and demand from all the big players, from everybody, the whole market. And who has to submit this information to the CFTC are the bigger players. But is there somebody out there that's making big moves that are not having the data recorded? I don't know. Maybe there is, maybe there isn't. All I know is that this area of weekly supply has been removed. And for that area to be removed, there must have been demand coming in the market. And that demand originated right over here. So that's where I'm looking to get in. Because whoever was buying enough Aussies down here to take out this supply, if they are waiting for demand to exhaust itself and price to retrace so that they can fill in the rest of their buy orders, I want to ride with them. Because I believe we're going to see something like that happen. Okay, so USCAD, we see that long exposure increases from 22,000 to 25,000 positions, and shorts decline very aggressively from 68,000 to 42,000. That comes as price drops from the weekly supply imbalance. We're now hitting a weekly area of demand where I expect to see a move to the upside. Short exposure is at 63%, a drop from the 75% the previous week. Net positions is negative 17,000. So what is to be expected from here? Looking at the technicals, we've got a monthly downtrend. We could see a continued move to the downside, although I think it's possible that we have a move up here to this area of supply. It's very hard to tell because, you know, a 3-month area of demand is in control and that takes precedence over everything. And that means over the long term we should see a move to the upside, but it is already tested for the second time. So we could see a deeper penetration. A lot of things can happen here. It's a very, very tricky chart. So I am going to look at the data. The data says that they're closing off shorts as price was dropping. So if they were expecting a bigger move to the downside, why are they closing off so many shorts, right? And adding long. Is it because they're expecting this? Maybe. I'm not going to take any trades because it's not the clearest chart. I'm not going to go long against a monthly downtrend with the monthly 20 EMA in control. That's just suicide. And I'm not going to short down here because we have a weekly area of demand in control. So maybe once this area of demand gets taken out, you know, short pullbacks upwards, that's a possibility, but we'll wait and see. Right now I'm not taking any trades on this one as of yet. Okay, US Swiss franc, what do we see here? Longs dropped by 2,000. Shorts increase from 29,000 to 31,000, and we have long exposure at 59%. The coloration of the cells are neutral. Like I've been saying, monthly area of supply is in control, so the force of price is downwards. We had a weekly area of demand get hit. It was short-lived, and now we're getting a bigger push to the downside. I expect to see price all the way down here, where we have more demand here and then a bounce. Not taking any trades on this one. Euro USD. So longs increase 198,000 to 208,000. Shorts also increase from 112 to 116,000. Long exposure remains at 64%. Net positions increase from 86 to the positive and to 92,000 positive. So we fell short of hitting this weekly area of demand, but now we are penetrating deeper into this weekly area of supply, which I expect to break very shortly, and then I expect to see a move to the upside like this. We've been expecting this for quite some time, and it looks like it's starting to come through for us. So, am I looking to take long trades? Not just yet. I don't see anything really well formed. We got a weekly area of supply here that we're going to get a response from to the downside. So maybe once this area is taken out, we can have demand. Maybe down here, taking longs. I'd take longs there, but we'll see what happens. Right now I'm not taking any trades long, but I do foresee price moving upwards. Pound US dollar. So longs are still aggressive. Shorts increase 56 to 63,000. That's as we are down here. Price eventually moved higher. Long exposure is at 55%. So bullish bias for quite some time now, and we're at 55% long exposure, which leaves lots of room for the institutions to add to their longs, and an eventual move all the way up here is what I'm expecting. So I'm waiting for the right setups to happen, preferably this top to be taken out and then longs. But I do also see another opportunity to get in long a little bit lower here, and I think I'm going to be planning that trade this week to take advantage of a move to the upside right before these highs get taken out. It's a little bit more aggressive to do it like this, but I think the pieces of the puzzle are correct, the way that I'm viewing the puzzle, in that this is about to break up to the upside. So I'm going to take advantage of getting in at a little bit better price before that move to the upside happens. US dollar, Japanese yen. So we see longs increasing from 151 to 160,000. That comes as price pushes upwards into that area of weekly supply. Long exposure continues to drop from 82 to 80 to 78%. Net positions increased by 2,000 to 116,000. Longs are aggressive, shorts are cooled off, but becoming a little bit more neutral. I'm still expecting price to continue dropping down like this. We got a really nice bearish candle formed this past week, so that's what I'm thinking is going to happen. 84%, 80% drop, 84 drop. Every time we're in the 80s, we see a drop. So we're starting to see a drop right now. So like that. The Kiwi. So longs are becoming cooled off as we're hitting this weekly area of the supply, nested within the monthly area supply. It's within here that I'm expecting a drop in price. Shorts are aggressive, but if you take a look here, only 65% of their overall exposure is geared to the short side. So that leaves lots of room for shorts to be added to. So I believe that we're going to see a drop in price. This is pretty much the only pair that I believe is going to be getting weaker with the US dollar. So with both of them getting weak, we could see, you know, some stalling action before an eventual move to the downside. So I'm waiting for the right setups to take place on the daily chart, and if they present themselves, then I'll be taking advantage of that momentum to the downside. Alrighty then, so let's take a look at what we got on the economic calendar. I don't think there's much coming on this coming week with the New Year's. Here we got FOMC on Wednesday, and we have non-farm payrolls on Friday, which will get the week kicking. Yeah, so that looks pretty good. Anyways, guys, it's the end of 2017. I hope you guys had a good trading year. I know it was a pretty good year for me. I learned a lot. That's the key. I made lots of mistakes, but I learned from those mistakes, and I'm constantly trying to improve my trading. So I really appreciate this journey that we've been going on together. Really appreciate all the support that I've been getting from all of you out there. I'm going to continue to do these reports, and I hope they make you better traders. Alright guys, so let's kick in the new year with some style and some class. Hope you guys are safe out there and have a great time. We'll see you in the new year.